Well, it is the end of the earnings season, but there are some numbers that have come through and we want to analyze them. MM Forgings reported yet another sluggish quarter this time around. The slow performance, the company, according to the company, they've spoken about weakness in exports, projects getting deferred. And this time around as well, if you look at it, the top line growth has been in single digits, about 7.5%. The margins have actually fallen to 18.6% versus 19.3% same time last year. We have Vidyashankar Krishnan, who's the Vice Chairman and Managing Director of MM Forgings, who joins in. Mr. Krishnan, thanks a lot for joining in. You know, last time when we spoke to you, you had indicated to us that, you know, exports are sluggish, you're seeing projects getting deferred, and that explained the single-digit growth on the top line. Are you seeing any recovery at all, and what is the prognosis for Q4?
Morning, everyone. We've seen a sluggish Q3 and a reasonably, what shall I say, middling Q4. It's not a hot Q4 as far as the domestic CV market is concerned. We see decent traction on the export side. Overall, we are on track to reach about 1,600 crores of turnover for this year, which is what we had kind of maintained the last few forecasts. Okay, it's a little bit down from the 1,800 crores that we had originally targeted at the beginning of the year. But I'm sure that next year we have enough traction on hand to propel us past the 1,800 crore mark, or at least reach there comfortably in this coming year, which is 24-25.
Vidyashankar, morning. This is Reema here. You said domestic is decent, exports is a bit soft. Reverse. You said domestic is decent, but exports is a bit, I'm getting this wrong. What you were trying to say is that exports has been decent. This is in contrast to
in Q3.
Yes. Now, exports is about 20% of your overall revenue. And decent exports is in contrast to what Bharat Forge had to tell us. And they indicated that as they look into Q4 and further into FY25, they expect growth momentum to moderate even in the export markets. They spoke about Europe in particular, where you have a fairly high exposure. So can you talk about what is this decent export growth that you are seeing, and how confident are you about exports sustaining in FY25?
We see some traction on the export side, particularly coming in from Europe. So many customers have come back to us with higher shares of business, increasing their portfolio offtake from us. As a result, we would see more traction on the export side in 24-25.
Okay. Earlier, you had guided for full year margins at 18%. Now, this time your margins have fallen about 70 basis points, coming in at about 18.6%. Do you want to change your full year margin guidance? And also for FY25, what is the kind of band that you're looking at? Because, you know, your margins on an average have been in the 17 to 19% band for the last 5-6 years now, while many of your peers are sitting at 20% plus margins. So when do you think you could see a move out of this band?
In 24-25, we should see a breakout challenging the 20% mark.
Okay, so
which
that
is what
is
we said earlier, that in a year's time we would see margins challenging the 20% mark.
Okay, so by FY25 you're saying margins will challenge the 20% mark. So for FY24, what would your target be?
Better than previous year.
Okay.
Better than previous year. Continuing the momentum with compression on costs, etc. So the margin growth will take place from Q4 onwards, and we should see reasonable margins in Q4 and onwards.
Okay, and FY25, you should hit 20% margins. Just talking about FY25, your revenue guidance is 1,800 crore on a base of about 1,600 crore. So that's a growth of 12.5%. Can you break that up in domestic revenue growth and export revenue growth for us?
I would say 10 to 12% growth across both the sectors, across both the markets.
Okay, so the export revenue contribution should stay around 20%.
Yeah, yes, around 20%.
You've entered into the SUV sector in the passenger vehicles segment, where you are expecting accelerated growth, because right now it doesn't contribute too much, 5 to 6%. Can you talk about the growth potential, because you're now catering to SUV, which is the hottest segment in automotive?
Yeah, there is a lot of traction for us in the SUV market, and we see that coming in from end of FY25 and onwards. We will be adding a lot of parts in that segment in the coming months. We've already added. Those go into production from September and onwards.
Okay, that's
Basically,
interesting.
H2 FY25 will be start, and FY26 onwards should be strong growth in those markets.
And what about in the EV side? You said you're not looking at electric vehicles until the first half of FY25. Have you made any changes to that plan? And you also had a target of 2,000 crore revenues from EVs by 2030. Are we on track to see that?
As I said, early days yet, but certainly we are working on customer acquisition and building up the base in terms of technology and product portfolio for the EV business to zoom ahead by FY30. So that's a long-term goal, and we are working towards it. Certainly, that looks to be on as of now.
All right, we'll leave it there, sir. Thank you very much for joining us, and good luck, as always, from all of us here. Thank you.